So I'm very happy to be speaking to Alberto Arenaza today. Alberto is the co-founder of Transcend Network. Thank you for joining me today, Alberto.
Yeah, thank you, Luigi. Excited to be here.
So, Transcend Network, what is it and what do you do?
Yeah, so I'm one of the co-founders of Transcend Network, and we work with early stage founders we're building the future of learning and the future of work. We help them in the early days of finding the product market fit, help them identify basically problems that are worth solving in the education space. And then once they start to see a little bit of traction, they can go on to graduate, find potentially more investment, find other partners. We're really the first, the place that they go first to find that early support. We have worked with about 350 founders through our fellowship, which is the main way in which we support founders. And we also run a pre-seed venture fund. So we're able to write the very first check into companies, primarily companies that are going through the fellowship. But yeah, so we're really focused on helping founders in the early stages of building EdTech startups. And our mission is to help founders transform how 1 billion people learn and work. So we've been doing this for about 4 years, but we think we have a long way to go. So
Okay, so I take it there's two main parts to it. There's the network. Can I call it like a founders bootcamp? Would that be okay?
Yeah, that
Okay.
works.
So founders bootcamp, and then there's the fund, the VC side to it. You mentioned most of the early stage companies you invest in with the VC fund have gone through the fellowship, have gone through the boot camp, as I was calling it just a second ago. How many of the companies that participate in the fellowship, like how likely is it that they're going to get investment from you? And if they do, how does that work? Who else do you partner with, if anyone, for the first early stage funding and so on?
So they actually serve very different purposes. So it's not necessarily that the goal of the fellowship is to get an investment. In fact, we make it very clear that the fellowship has a different goal, which is to help founders find product market fit. So the way that it works is we run 3 cohorts a year with about 30 founders at a time. So roughly 90 to 100 founders in every year. In these cohorts, we help them run daily product market fit experiments to validate who the customer is, what problem they're solving for them, and how can they solve it in a way that is exciting to the customer. So it sounds very basic, but it's a really important foundation to have as a company. And we think that whether you're building a nonprofit, a for-profit, a venture-backed company, a bootstrap company, that this is a strong foundation that you need to have. And what we help them do is, as they're validating how to solve this problem for the customer, we help them run daily product market fit experiments that are very low cost and the things they can run in a day, instead of spending months and months building a product that then goes out to the market and turns out nobody wants. And so it's a program that's very, very focused on helping founders find product market fit. Now, when some of the companies start to do well and they think about finding an investment, we guide them on the process of deciding whether they should be raising from angel investors, whether they should be raising from venture capital funds, from foundations in the form of grants, through impact funds. And so we call this funding models. We want them to help them find their funding market fit. And we help them find case studies of founders who've gone in those directions and have built with those funding models. And then when there's founders that are starting to see traction through the fellowship and they're interested in raising capital from a pre-seed venture fund, that's when we can come in and write that very first check. And so we invest in about 10 companies a year through the fund. But yeah, there's a lot of companies in the fellowship that are not even interested in the fund, and we don't want them to be limited by this. And I think the philosophy behind all of this is that we don't think that venture funds and venture funding is the kind of we don't think that venture funding is the only funding model for tech startups. In fact, my co-founder Michael has started multiple bootstrap companies in the past. We bootstrapped Transcend as well, and we think that this is something that is a really good fit for a lot of edtech startups. So we want to help founders regardless of whatever funding model they're going for. We think that finding product market fit is extremely important, whether you're doing a nonprofit or for-profit. And I would say that companies like Khan Academy or Code.org are great examples of companies that had an incredible sense of product market fit, even if they were not raising from investors and charging for the product. And so that's the way we think about it. We're also very connected to investors across all those different funding models, right? So we want to be the kind of the place where they can find the match to the right type of investors. And because we're usually the very first investor, we have a lot of people that are interested in co-investing with us, and so we can play matchmaker. And I would say that's a big part of my day-to-day work, is just thinking about how I can connect a founder that might be building something that's a fit for Zanichelli, or someone who might be building in the K-12 space, who are angel investors or advisors or foundations that want to invest in these types of innovations. So it's a really cool place to be. We're almost like we're seeing what's happening at the early stages of edtech startups. We get to work with about 100 companies a year, but we have a lot more companies apply. So we get to keep our hand on the pulse of what's happening, and then almost direct them to the right resources and the right places for them.
This is super, super interesting. Many things to discuss about this. First, I think I'm curious to delve a little bit into this matchmaking, and perhaps as you mentioned, yeah, not all edtech companies are not all of their funding models are supposed to be venture capital. In fact, just a portion of them are either suitable, or is it the right thing for them? I mean, not only is it not only might they not be the right kind of company for VC, but also VC is not the right kind of funding model for them. Like, it goes both ways. So I'd like to ask you to kind of delve into this a little bit more. Like, how can perhaps a participant to Transcend Fellowship with your guidance, but kind of, can you already give us an idea of who suits bootstrapping, who suits impact investment, who suits VC, who suits whatever kind of funding model?
So let me use an example of how founders usually think about it before we work with them a little bit more closely to figure this out. Often a founder has built an innovation, whether it's a product or a learning methodology or a program or perhaps service. They're starting to get some traction from the market, but in order to really grow and be able to service bigger customers, or to kind of build a product and hire a bit more of a team, they want to raise a little bit of funding to be able to do that. And so they think about, what are the options that I see out there? And they often see that venture VC investors and VC funds are all over LinkedIn. And they think, well, that's probably like a good fit for me. And what we see that's missing there is a deeper understanding of the psychology of venture capital and the type of companies that represent a success. So as I'm sure you're very well familiarized with, but like a VC fund gets to make about 30 bets in every portfolio, assuming that 25 of them in the rosiest scenario, 25 to 30 of them will disappear or go to a zero. And really, one or two companies will return the majority of their portfolio. And so they're not interested in investing in a company that can get to a meaningful size and build a really good business. They're interested in companies that will have more than $1 billion of value eventually. And so they're looking for companies that are going to grow quickly and that have the potential to get really large. If you're building a really cool product that is very innovative, but it's in a small market, it's almost directly rules it out for a VC.
Yeah.
If you're building a business that is going to have a very positive impact, but it's not going to have a clear financial impact, that's also kind of almost directly ruled out. There will be some funds that measure the impact of their companies, but it needs to be coupled with financial performance. And so if you don't have a clear pathway to your company becoming $1 billion or more, it's not a good fit for most funds. And you can just do a quick math. If you're raising at a $10 million valuation, you need to multiply that by 100, right? So at that point, that's when it becomes a little bit relevant for the VC. Now, when it comes to bootstrapping, when it comes to like raising from angels, we see it as kind of some of the easier funding models to adapt early on while you gain conviction for what type of funding might be best for you, right? So we often see a lot of founders that say, look, I see I'm a former teacher. I built this great tool for the classroom. It solves a real problem for teachers. Maybe there isn't a great monetization model there. And for that founder, it's probably going to be easy to find a former teacher who is now an exited EdTech founder who can write a check into that company as an angel investor. That's relatively common, and that's a big part of our work when we are connecting founders to angel investors. It's going to be a lot harder for them to find a venture capital fund to write a $2 to $5 million check into that company unless they have a lot of traction. And so the way we see it is founders should always try to maximize their optionality in the early days while they figure out what type of business they really want to build. And there are a few businesses in EdTech that have the potential to really scale and be able to represent a good outcome. And if you are convinced that that's the type of company you want to build, then I think it makes sense to explore a venture fund. I think we have a really interesting perspective on this work where because we write the very, very first check, we're usually getting in at really low valuations. And that makes our model work where we don't actually need to have $1 billion outcome to return the whole fund, right? That's something that we intentionally want to keep into our model where if we're getting in at a $3 to $5 million valuation, the type of company that would represent a success for us is a lot smaller than $1 billion. And I would say that's actually very aligned with the type of companies that you can build in EdTech. In my experience, it's relatively easy to build a company with a meaningful size, even if it's not $1 billion outcome in education. And why do I say this? It's because education tends to be very localized. It tends to be very, very much focused on trust and relationships. And so if you're someone who can earn the trust of customers and you can build a very relevant solution to a problem, it doesn't take a ton of resources to build a product often. And you can build a really meaningful business, even if it doesn't get to $1 billion. And so I think that's going to be a part of our model always, is that even though we think of ourselves as a venture fund, we don't necessarily need to have venture style returns. We don't need to invest in a Duolingo to feel happy with the types of returns we're getting. There's a lot to unpack there, but if I were to summarize what I think about the education industry is that we tend to build companies that are very resilient, even if they don't grow as quickly as, let's say, I don't know, a Web3 or a fintech or a B2B SaaS company. They tend to be resilient in that they live for long. They have a positive impact for the most part. I think I don't believe that all education companies are sort of impactful companies, but the majority of them are. And it's relatively easy to get started because you don't need a lot of resources to build an initial service or initial product that you can use to validate the market. And so that's why we love working with EdTech startups. And it's been our careers. We don't want to work with founders in other industries. This is 100% of our time and work. And I think the venture model and the investment models need to accept that reality and work around those constraints.
I'm curious to delve into one specific of all of what you said, which is wonderful, and it kind of I'm looking forward to this interview going online also for people who look for investment with Zanichelli Venture, because I think people hearing like, okay, this is not the only solution, and really think about which solution is right for you, and then who is right for you, is something that is going to be probably pretty good for many founders out there who are looking for investment and get in touch with us.
And I'll actually add to that, Luigi, that VCs are the first ones to tell you this because they understand the trade-offs of their business. And what's unfortunate is that there isn't a ton of information out there for founders to make decisions on what type of funding models are best for them. But when you speak with a venture capital investor, they can usually tell you very directly, I don't think your business is a good fit for venture, and here's why. So I encourage all founders who are maybe listening to this to ask themselves that question and ask other investors they might know to share openly, because it's not that there's a secret agenda of not wanting to share anything. It's actually that VC has been such a dominating narrative in the startup world, and I think it's time we start kind of rethinking some of those hypotheses.
Yeah. Totally agree. Let's move to product market fit. Big topic, and people have been talking about product market fit for a long time. We're not introducing a topic that is kind of the hype of the moment or anything. I think investment funds as well as incubators, accelerators have been drilling product market fit into founders' minds for many years now, yet there's a yet. I think, it's still challenging to be rational about it, I think, for founders. And especially in EdTech, there's many challenges to, being able to test out your product and design prototype iterations and have the chance to build up your MVP, basically, unless you're building something that is tested like on which is fine at the very, very, very early stage. It's tested on your brother's daughter or your niece or whomever. Fine, okay. But then of course getting K-12, but even corporate might be easier than K-12, of course, because there aren't as many procurement barriers for sure, but still a tough area, EdTech, to kind of do that. So what can you say about all of this?
So I think product market fit is the number one thing early stage founders should be obsessing about. I think it's the number one predictor of success later on. And success, I mean, depending on what the founder wants. Whether you want to build a nonprofit or for-profit or venture-backed or bootstrapped business, like you have to find strong sense of product market fit. Otherwise, nothing is going to work. A lot of founders think that like the product is not growing yet, but when I build a better product and when I build more features, it will work. And that rarely is the case. So what doesn't work about the way we think about product market fit today? I would say two things. One is we tend to think about it as a binary variable. You either have it or you don't. That one's it's really tough to measure product market fit, right? Like when you ask a founder, they usually tell you like you just feel it, like you just know. You're trying to sell something, you're kind of begging people to meet with you, and then at some point you pivot the product, and then all of a sudden they're lining up to talk to you, right? Like that. It's hard to measure though. Like it's hard. What are the leading indicators of that sense of product market fit? What we try to do is break down the process of product market fit into a number of stages. And what we've done here is we worked really closely with John Danner, who is a serial entrepreneur and angel investor in the EdTech space, who has written a lot about his way of thinking about product market fit. And we've kind of remixed it a little bit. We work with him to kind of like make some of these updates. And we've come up with 5 stages of product market fit. The first one being the pain point. And so in order to find that sort of ultimate product market fit, you have to start with a very clear definition of a pain point and a very clear definition of an ICP or ideal customer persona that's experiencing that problem. If you don't have that clarity, then there's nothing to do because you're not going to find multiple product market fits for multiple people. It's only going to be for one persona. And so we encourage founders to run daily experiments to make progress on that product market fit stage, which is the pain point, until they have an absolute certainty on what that pain point is. We don't let them focus on anything else. And so you get the pain point, then you move on to the magic moment, which is the moment in which you show your product to your customer and the customer understands that you're solving the problem that they were experiencing, right? So imagine that kind of we're thinking of corporate learning. You mentioned corporate learning, right? A lot of L&D people struggle with products that their company uses and very few employees actually use, right? So usage, engagement, impact, those are really big pain points for them. So the founder will first have to interview a bunch of L&D managers as the ideal customer persona and come up with a very clear pain point that they're struggling with, and then show how the product solves that pain point. And that's a magic moment. It can happen in a landing page, it can happen in a demo, it can happen in like an event, an online event, an in-person event. And so we help founders perfect that magic moment and the conversion to the next step.
Yeah.
Once you have that figured out, then you focus on retention. Then once you have retention for a small group of students or for a small group of users, then you move on to growth. Then you move on to like optimizing the funnel. So, but the idea is that you do one thing at a time instead of trying to do it all at once. So that's answering the first idea of like what's broken with the way we think about product market fit, which is that we don't know how to measure it. And then the other thing that's really hard about product market fit, and you kind of touched on it, is just how hard it is to get access to people that will talk to you, particularly in education. If you're trying to build a product for teachers, you might have more luck because teachers tend to be very generous with their time when someone is building an interesting community or an interesting product. But if you're trying to build a product for principals at a school, like good luck finding those principals, right? It's a lot of work to kind of break through that that barrier. And so that's why we see that a lot of great education investors, great education founders are second-time founders in the EdTech space because they've already built relationships with teachers. They might be former teachers. We see a ton of former teachers who then become EdTech founders, or university professors. It doesn't matter what it is, but you have to have some sort of unique access to the ideal customer persona you're serving. And there's shortcuts around it, but it's definitely hard. And so we find that great founders tend to find ways to always be talking to their customers in the early days and building a strong relationship with them so that they break that barrier and they're able to test out new ideas with them and find that early signs of product market fit.
By the way, at Transcend, are you able to facilitate finding like a customer baseline to test out the product?
It's a part of our work. So I'll say it's a really difficult part of our work because that matchmaking is even harder. But we built an advisor group of educators that come and meet some of the K-12 founders we work with, and we're sort of slowly building out other industries. But it definitely takes time. It takes a lot of trust. And so right now we're able to facilitate kind of one-off intros. And we've started building out this sort of advisory groups that I think are going to be a really big part of our future. So
Very
So
interesting. This leads us to the topic of test beds, a topic that is very dear to me. I've worked on it quite a lot, and I wondered, do you think the increase in test beds worldwide is going to make a difference in this sense? And I think here, so we're seeing this in K-12 and higher education. I think it's interesting to hypothesize how this might be for corporate as well, or for workplace learning. Although I wouldn't say this is really a feature of workplace learning, I guess. But so, what do you think? What do you see? Do you see this influencing the second difficulty you were mentioning of product market fit in EdTech early stage?
yeah, I think it depends on how you set up a test bed, right? But at the end of the day, that's just a name. There's like 1,000 different ways to set it up.
Yeah.
Sometimes I see an approach of helping, let's say, universities, right? Let's say, look, it's really hard for founders to reach universities, so we're going to build a test bed or a network or whatever they call it at the time, where we find a universities and developers or kind of startups that are building products. I want to get them to talk to each other. In my mind, that is not super useful because it's relatively hard to find a perfect match between a university and the startup that's solving a problem that they care about. What I think is a lot more productive is to say, let's take this way earlier and say, before you've even incorporated the company, before you've even like given it a name or build a product, let's make sure that people are building for problems that universities are facing, like real problems, right? Or schools or teachers or students, doesn't matter, right? I think with evidence, I would say this is a similar thing, right? It's like you can try to measure what works once the products are all done. It kind of and it's a tough balance, right? Because to do the more rigorous research like RCTs, you often need a lot of there's a lot of overhead. It's a has a very high admin cost. In my mind, the best way to do it is to give a little bit more flexibility, but get really to the point of like what is the problem that you're solving here, like what's the key thing that this customer is facing, because if all we do in the next 10 years is help create 10 times more edtech startups and they're all solving problems that are kind of surface level, then we've done absolutely nothing. And I'm being a little bit critical of our role as an industry and as an ecosystem, but I think it's interesting that in the US, we saw an interesting experiment with ESSER funds coming in and allowing a lot of schools to purchase products that they wouldn't otherwise have purchased because these were funds that were federally allocated. And it was basically like free money for the schools.
Yeah.
And a lot of that money was not allocated into very impactful problems. These are tools that are going to be dropped next year as soon as ESSER funds dry up, and I think that's really too bad. I think I think the future of education and education technology does not involve a lot of useless tools that don't really solve the real problem, right? And I think that's one of the reasons why I don't think we're doing a good enough job at solving the fundamental problems of education yet as edtech startups founders, because the schools and the teachers and the universities are a little bit reluctant to talk to us. And it's because we're not representing a solution. We're representing like another time suck, right? It's like, oh, I need to talk to another founder who's going to be selling me on something. That's not the way to go about it. So in my mind, any test bed needs to really integrate the talent of a founder and their ability to build a product with the core pain point that the teacher or the university or the student is facing, and helping get started before the product is even built. Because once you have a founder that has a clear product of what they're building, it's I think it's a little bit less useful.
I think you make a very interesting point about test beds there. that supposing it has a time limited program, okay, 1 year program of a test bed. I guess both the startup or developer and the higher education institution or school that is involved, they both get so invested in the solution that at that point the customer who was a co-builder of the solution, if we're talking about that test bed that is like in co-development, let's say, then are so invested into the solution that the adoption of the educational institution that partnered up with the startup to develop the product or service isn't really a reliable feedback source at that point of, is this really a pain point, or is this something that they've invested so much into that they have, I mean, they might be getting some use for it because it's so tailored to their specific need that it might be useful for them, but is it sufficiently direct to the core pain point that it will translate for other customers as well? I think that you make a very interesting point about test beds risks there.
I think one of the fundamental problems in building education technology is that every stakeholder has a slightly different incentive and set of needs. And with the comment you just made, I think for me, it always comes down to, well, whose problems do you want to solve? Do you want to solve this problems of the school admin? Do you want to solve the problems of the teacher or the student that's going to school every day? And I don't think that there's one that needs to be kind of superior to the other. I think we need to make sure that there's the appropriate and like structure for the school to operate. We need to make sure the teachers are well supported and ready to kind of make the most out of the time that they have. And we need students to be excited to learn and willing to learn. And the things that enable those three things are very different, right? Often they're at odds, right? So whatever will help the teacher doesn't always help the admin or doesn't help the student. And I think it's hard to solve all of them at the same time. I think EdTech, the benefits of working in the early stages of EdTech is you get to test out a lot of things. And so you get to see what works for the teacher, what works for this school admin and the principal, what works for the student. And we, as an industry, need to keep finding ways to advance the industry by identifying the sort of leverage points, right? So we maybe identify like, oh, there's an opportunity here to help teachers save time with AI, right? Like let's invest resources there. But let's not just stay at that surface level. Let's try to identify what are the further things we can do to help teachers in this specific area. And so I think in my mind, the beauty of the EdTech ecosystem is that it's going to have a lot of different tools that help different stakeholders because you can solve them all at the same time.
Let me get your thought on this, on translating it to corporate or future of work and to B2C EdTech. How do you think all of this translates to that? Is it easier for B2C to find, to find product market fit, because the second problem is the second problem you identified earlier is kind of easier for B2C, and what's it like for corporate?
Oof, I don't think it's easy for anyone. I think it's easy. I think it's quite difficult for both of them for different reasons. When you're working with corporates, the more in the future of work space, it's hard to get access to potential customers. But when you do, if you have a really clear value proposition, they might sign a multi-million-dollar contract with you, right? And it will take a while. It will you will have to jump through so many hoops, but you might be able to close $1 million contract right away. Do you know how many I don't know, consumers and a monthly subscription it takes to get to 1 million?
Yeah.
That's a lot. So
yeah.
it's a lot easier to get to those users, but at the same time, it's almost like you have to search a lot more to find the right type of user, right? Um, if we take an example like Duolingo, I think if you were to try to start Duolingo when it started with the goal of finding language learners, the people that were already spending money on Rosetta Stone or whatever other tools they were using, I don't think Duolingo would have been as successful because they they tried a lot of things. They're one of the best companies in our space in terms of experimenting. Um, and they tried so many things and they figured out that there was a new type of learner that was not learning languages. They weren't spending hundreds of dollars to sign up for an in-person course. But they loved learning and they loved to be challenged and they loved how they felt when they checked this item of their list and they were able to get back kind of continue their streak, right? So Duolingo in a way is a a product that is amazing for an ICP that is surprisingly like not that interested, I think, in language learning. They obviously they're interested in language learning, but they're really interested in learning and in staying motivated and staying accountable to accomplish their goals. Um, and that's the type of consumer insight that's really hard to find. So any consumer language learning founder will know how many different ICPs you can go through. And so I don't think there's one that's easier. I think markets come easier for different founder profiles, right? So when we see a founder that's a great salesperson and they really understand the corporate learning space, maybe they've been a VP of I don't know, learning and development
Consultant.
for a while. And so like it's going to be impossibly hard for them to build a consumer business. Um, and so we want to help them kind of find what feels like kind of in the flow, what's flowing for them. So
Makes sense. Makes sense. This has been a very, very interesting talk. We could go on for hours, I assume. Yeah, I'm gonna have to contain myself. And thank you a lot for being with me today. Thanks for your time, and I look forward to seeing what companies come out of Transcend
sure.
Fellowship.
We have
Uh,
a new cohort that we're announcing in a few days. Our 15th fellowship cohort should be about 35 founders from almost 20 different countries. So
and they've
excited
all
to.
been selected already.
We're in the process of selecting, and now we're getting all the confirmations, and we'll share it in a few days.
So stay tuned.
Yeah, thank
All
you, Luigi,
right.
for your
Thank you,
time.
Alberto.
Have a good one.
Thank you.